About a month ago, we did an early look at HDFC Life's newest plan, Click2Protect Supreme Plus. When details were still unfolding, now the full product document and policy wordings are live, and this is the complete breakdown. We're going to cover every major variant, every structural feature, what genuinely adds value, what's optional, and whether the higher premium is justified. Hello folks, I'm Shashank, you're watching Ditto Insurance. At Ditto, we help you compare health and term insurance plans with honest, no spam advice from IDI certified advisors. We support you right from applications all the way up to claims at no cost to you. If you ever feel confused while choosing a term plan, book a free call through the link in the description. Alright, let's start with the video. Let's begin with the insurer fundamentals itself. HDFC Life's latest disclosed numbers show these figures. From an operational standpoint, this is a large, stable private insurer with a long track record, so no issues there. Supreme Plus has now been strengthened with 5 focused enhancements. First, it introduces women-centric benefits designed to offer added value and tailored coverage for female policyholders. Second, the life stage option has been expanded, offering greater flexibility to increase cover at key milestones. Third, an education income benefit add-on has been introduced, enabling structured payouts to support a child's future education needs. Fourth, the discount structure has been improved to make the plan more competitively priced across segments. Finally, pricing is now dynamic, taking into account PIN code and overall risk profile for more refined and personalized premium calculation. Don't worry folks, I will get to each of these points in detail, but now that we've understood what's different, let's break down the structure of the plan in detail. The plan offers 3 primary variants: Life, Life Plus, and Life Goal. Under Life, you can choose level cover, increasing cover. Life Plus includes an additional accidental death benefit on top of the base sum assured. Life Goal is structured as a decreasing cover aligned to financial liabilities like loans. Now, on top of this plan includes an inbuilt terminal illness benefit up to 2 crore rupees paid on an accelerated basis if diagnosed before the age 80. One of the marquee features here is a smart exit benefit. If you hold the policy for at least 25 years, and you can surrender it and get back 100% of the base premiums paid, excluding rider premium and taxes. However, there are conditions. The minimum policy term must be 31 years, the option cannot be exercised in the last 5 policy years, and it is not available with the return of premium variant or under the Life Goal option. For very long-term buyers who want flexibility, this kind of acts as a structured zero-cost exit. Another meaningful feature is the life stage option. Now, if you choose this at inception, it allows you to increase coverage during major life events. Like on marriage, you can increase the sum assured by 50% up to 50 lakh rupees. On the first child, 25% to 25 lakh rupees. On the second child, same, 25% up to 25 lakh rupees. And also on taking a home loan, 50% up to 50 lakh rupees. This must be exercised within 6 months of the life event, and the policyholder should be less than 45 years of age for this benefit. Now, for young professionals expecting responsibilities to grow, this flexibility can be quite practical. Okay, now let's talk about premium break benefits. There is a standard premium break available to all the policyholders after completing 5 policy years. You can defer paying premiums for 1 year, and this can be used multiple times during the term with a 5-year gap between uses. In addition, there is a women-specific structure that includes premium break. After completing 2 policy years, eligible female policyholders can choose not to pay premiums for up to 12 months while continuing coverage in case of pregnancy, anytime during the pregnancy or within 6 months post-delivery, or in case of spouse's death within 6 months from the date of death, provided the policy is in force, all prior premiums were paid on time, and there is a 2-year gap between successive premium breaks. But yes, you do need to pay that premium the next year. Another structural addition is the instant payout on claim intimation feature. For policies with sum assured of 1 crore rupees and above, HDFC offers an accelerated payout within 1 working day after death claim submission with necessary documents. 2 lakh is paid for covers between 1 and 2 crore rupees, and 5 lakhs for covers 2 crores and above. A 1-year waiting period applies, and this is not available for lower sum assured bands. This provides immediate liquidity to family members before the full claim settlement. The Parent Protect Care option allows the death benefit to be structured partly as a regular income for elder parents or grandparents aged 50 and above at entry. At least 20% of the payout must be structured as regular income, and the income stops if the nominee passes away. Policy terms have ranged between 15 and 40 years. Now, this feature is positioned towards working professionals supporting aging parents. Now, coming to riders, the plan offers a critical illness rider on an accelerated basis, an accidental death benefit rider, cancer cover, and a waiver of premium rider. It's to note that for married women, a waiver of premium benefit is available at the policy inception for non-single pay policies, under which all future premiums are waived and the policy continues unchanged in the case of the husband's accidental death. The husband's age and occupation are captured at the issuance. The rider is not available for hazardous occupations, and premiums paid for the benefit are or refunded if the smart exit option is exercised. The accidental income benefit rider pays 1% of the rider sum assured per month for 10 years in case of total and permanent disability due to accident. For example, a 1 crore rider would pay 1 lakh rupees per month for 120 months. There is also a Live Well rider that bundles accidental death coverage, personal accident elements, policy continuance benefit, daily hospitalization cash, and surgical care benefits. Now, in terms of payout flexibility, you can choose lump sum, regular income, or combination of both. The education income benefit pays 10% of the base sum assured annually, capped at 10 lakh rupees, starting from the policy anniversary after death and continuing until the policy ends or the child turns 25. If the child is above 18, they can opt for a lump sum instead. The plan also offers wide premium payment term flexibility, including single pay, limited pay, options of 5, 10, 12, or 15 years, or pay till age 60, and regular pay for the entire term. Minimum income eligibility ranges approximately between 2.5 lakh rupees and 10 lakh rupees depending on age and profile. There are also integrations like health checkups, fitness and mental health support, and lifestyle counseling features, which add engagement value but are not the core risk features. Okay, now let's address pricing. Supreme Plus is typically priced 15 to 25% higher than several competitors. For instance, a 30-year-old male non-smoker buying 1 crore till age 70 would pay around 15,240 annually with HDFC, compared to approximately 12,900 with ICICI or 12,600 with Bajaj. Now that difference is meaningful. You are paying for a premium brand for structural flexibility, brand positioning, and layered features. Spouse cover is available, but in many scenarios, 2 independent term plans offer better flexibility and cost efficiency. We made a whole video on that, by the way. I'll link it in the description for you to see. The return of premium option is also available, but premiums are typically 80 to 100% higher, which reduces long-term efficiency compared to buying pure term and investing the difference. Now, if at this point you feel confused, then it's okay. That's completely natural. You can always book a free call through the link in the description, and we will help you compare the plans against alternatives based on your actual profile. So the final takeaway is this: Click2Protect Supreme Plus is feature-rich and structurally layered. It offers smart exit flexibility, life stage enhancement, premium break options, instant payout liquidity, and structured income benefits. It is not the cheapest option in the market, sure. Whether the higher premium makes sense depends on how much you value these added flexibilities. And folks, no plan is universally perfect, and this one should be evaluated against your long-term financial goals. And folks, if you found this breakdown helpful, then like the video, share it with someone considering term insurance this year, and subscribe to support Ditto's mission. I'll see you in the next one. Until then, happy insurance hunting.